Keem Chana Public, Saras above Saras. This is Raashii by side to make your accounting concepts clear. And here we go today. Today we are going to be learning about balance of trade. What is balance of trade? How it is different from balance of payment, and what all things are covered. What is the result of balance of trade? How do we manage it and all that. So let's get started. In this, first of all, I want to make this clear that today we are just going to be learning about balance of trade. Once this gets completed, we'll go to balance of payment, and then in third part we'll compare both of them and do the differentiation. Okay. So let's start. First of all, you must know that balance of trade is difference between imports and exports of goods of a country. Second, this was about this paragraph. If I am writing it in that way, I'll show. This paragraph is about meaning. The above said thing was meaning. Then in point 2 comes component. Balance of trade consists of only visible items. Okay, it consists only of visible items. Then record. Balance of trade records transactions related to goods only. Then we'll write about capital transaction. What about capital transaction? Balance of trade do not include capital transactions. Example, loan taken, bank overdrafts, letter of undertaking, letter of credit of undertaking, or letter of credit, which is also known as LOC. Okay, so first the distinction was about meaning, then component, then record, then capital transaction. Then in fifth, it includes scope. What does it include? Scope. Balance of trade is also known as BOT. Balance of trade has narrower scope as compared to balance of payment, BOP. Sixth comes economic strength. Balance of trade shows partial economic performance and status. Then seventh is result. BOT has either favorable result, you can also say it as balance, or unfavorable result. Favorable result means when exports is greater than imports, and unfavorable means imports are greater than exports. And then comes the point of settlement. BOT is unfavorable, balance can be settled by favorable balance, and vice versa. Now let me explain it in brief. This was just the overview. I'll explain you each and every point. Just wait. Okay, so first is balance of trade. What is balance of trade? Balance of trade is a difference between export and import of the country. This is the first point, this is the second, this is the third, this is the fourth, this is fifth, this is sixth, this is seventh, this is eighth. The first point talks about what is balance of trade. Balance of trade is difference between exports minus imports or imports minus exports. If this is positive, then it's favorable. That means exports are more and that's what a country needs. But if this is negative, this is not the right meaning. It is difference between export and import and this. And if this is negative, means unfavorable balance. That means a country has more imports than it has exports, and if balance of trade is positive, means a country has more exports than its imports. Then comes component. Balance of trade only includes visible item, that means goods. Balance of trade says if it includes only visible items, means good. It only contains goods. It doesn't takes in account services. Then capital transaction. Capital transactions are the transaction in which exchange of capital, money takes place. In the sense of services, lending services or borrowing services, for example, loan taken, cash credit taken, bank overdraft, letter of credit, letter of undertaking, all this doesn't comes in balance of trade. Then balance of trade is of a narrower scope than balance of payment, because balance of payment is a systematic record of transactions between a country and a person outside the country. It includes both goods, services, capital transactions. So it is broader, whereas BOT is narrower. And since BOT only shows the records of exports and imports of goods, the difference between exports and import of goods, it shows the partial economic status and performance and not the complete. What if the services are rendered more, then our GDP will increase? Exactly, no. So it does not take in account services. GDP is gross domestic production, and the production can occur in the form of producing goods or also in the form of providing services. Okay, so here it only takes in consideration goods, so it shows the partial economic status. Then result or balance. BOT has a balance. It either has a positive balance or a negative balance. Positive balance means exports are greater than imports, and negative balance means exports are less than imports, and no balance means exports is equals to imports. So it can either be favorable balance is when the balance is either positive or zero, as unfavorable balance means when it is negative. BOT is negative. Okay, then comes settlement of cost. Unfavorable balance means when imports are more than exports. This can be settled by increasing exports. Okay, so unfavorable balance can be settled by favorable balance, that is by increasing exports and imports, and vice versa. Because if exports are more and then imports, it can again go into unfavorable balance when imports are more than exports. So this is the all trade cycle. I hope you all understood. And so we are done today. Bye bye guys. If any comments, doubts or any thing that you haven't understood so far, you are specially invited and will always be welcomed in my comments. Thank you.